The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Good morning, everyone. Basil Chapman, Tiger Technicians Hour, the Thursday, March the 26th edition. And what's most important about today is within another couple of hours, we're going to find out whether the support in the E-mini at 2033.25, which gets really close to the lows that were established back on the 2033, was the low at the close on the 1st of March, and just a tad lower at 2032.50 on the this is a 120-minute chart at noon of that day. We went right to there, and now we're having a bounce, and there was a pretty close left side, right side. Well, it looks exact. Well, it depends on which candle you chose. I chose a particular candle for a reason. It also matched up with the diagonal Chapman wave inside wedge pattern. It says if ever there was an opportunity to at least have a bounce, right here is the moment that you should do it. There are two reasons. One is when you look at the daily chart of the E-mini, this is the June S&P E-mini, the low that was established at 2030.50 on the 11th of March, ran up, went to peak ABC, failed, has come all the way back down. Very often what we do is we look very closely to see, is there a test that goes toward, exactly to, or does it go under that particular low? There are three things that I look at. If in fact, let me just review this. I'm looking at the E-mini. You've got the 120-minute chart that made a huge arc formation. And that arc formation has tested the left side low that was made, I said on the 14th? On the 15th. And this is the first opportunity that there's been enough of a base formed on the left side that says that within the next couple of hours, from the low that was made earlier today, at 2033.25, that there could be a bounce. We've already made a leg A. I called it a gray A. Why? Because it is way under the previous high of 2107, made at peak F back on the 24th. And that says this has to be treated, and I've already drawn it in a number of charts, this has to be treated as a potential arch formation, lowercase h, bounce, that could have the temerity to go to the 259 to 262, maybe even 263 area. And then we should start to see if there's a test to come down, or whether or not we're going to continue higher to 2074, which is the 200-period exponential moving average. The orange, if you're looking at my charts at Tiger TV, you'll see that orange line right there. Now, a couple of things. Well, number one is that the MACD's histogram, those little red lines, have started to improve. They were improving, so price went down while the innards of the technicals were starting to improve. The stochastic went to, 3% or something like that? It went to 2.28%. I mean, that is the equivalent of on the upside, when things are absolutely stupendous on the upside, where it's holding tight and it's not just going to pull back, but as it held at 96 no, it was even higher than that. At the 96 area, it can go even higher in the stochastic, but it has to hold. As long as it holds, that's very positive. So we've got a left side, right side price time match. It says that this is the first time that in a couple of days that there's enough integrity to say there could be a bounce that's going to be the real test in a number of areas. Now let me show you what I'm looking at. So we've got the daily says, I've come down. I have not, the three methodologies that we use in the Chapman wave are, if the price comes down 2 but doesn't break the left side low and then bounces, there could be a rally and it'll take you up to the most important left side price point of importance, and that would be either a 9-period moving average or a peak or a gap. And in this case, it's 2069, the 9-period moving average in the daily. I don't want to even go there. We first have to turn around and have another entire day with a higher low bar. I suspect we will do it, but that's what we've got to wait for to see if we can even get that arch in the 120-minute chart. Let me run the numbers now so that we don't run out of time. Whoops, disappeared. Let me show you what I'm looking at here. Okay, just move this away. See, in that weekly chart, as far as I'm concerned, there is a legitimate case for a peak, Chapman wave peak C1 and a Chapman wave peak C2 right there. I had a very interesting email as I'm going to go to the numbers in a moment. And it was someone who always keeps me in check. And Kevin said, no really bad news and the market still sinks. That's the heading. And then he goes on to say, I think the last few days shows the market can drop significantly on lack of really bad news that you always bring up needs to happen in order for a big market drop. Then he goes on to say, well, fortunately, this is one of the very few flaws in your trading arsenal, Kevin. Not true. I have a number of flaws, and most of them are human. Most of the time, Chapman Wave is just doing exactly what it needs to do. The methodology, the reason why I always have trouble in programming or trying to program it is it's those cases like peak C1, C2. I would never ever have got to that point if it was programmed, because it would be looking for Ds. And then I discovered that there could be a peak C1, C2 that you could use as a phantom peak. It didn't succeed, but as long as you identify it and having all the criteria to sneak just those 3-4 points higher to make leg D, but the technicals failed to confirm, to me, that's a good enough sign. That's exactly what's happened in the weekly so far. This is the weekly on the E-mini. So let me run the numbers now. The Dow's down 72 at 17,646. The S&P is down 8 at 2,052. The comp index is down 28 at 4,000, and is that 849. The VIX index, now it's going to be very important, is up 77 at 16.21. We're going to find out if the VIX is just awoken and is now saying, hey, I'm in the game, folks. I'm moving. Or whether it is, did I say? Yeah, 84 cents. Or whether it's going to start to pull back very quickly. Now let's go on. So now what we've got is, we've got the gold is up 5 at 1202. I still think that the dollar is consolidating after huge gains. Whoops, what did I just do there? Where did it go? Oh, I hope I didn't do something silly. All right, here we go. Gold. So gold itself having a very nice single leg 8 to the upside. It's gone all the way from 1140s up to 1219.50. There's the continuous contract pulling back. And remember, I had drawn in the arch formation in the GLD, I guess. I should have drawn it in here. There could be another arch formation right here. And what we're looking at is the chance that if gold tomorrow, Friday at 4 o'clock, well, it closes earlier, but at 4 o'clock, if gold is above the 9-period moving average of 1,200. If it closes there, that'll be the first time it's closed there since the big breakout back in the week of the 16th of January. So it's been a while since gold has had that kind of strength. I call it strength, but at this point, I'm still calling it counter trend strength. And let me show you why. You see the left side, it's taken out, but it hasn't closed above that high of 1223 that was made on the 2nd of March. That's number one. Number two is, yes, I see a very nice potential here. There's been a very quick cup formation, but the real cup formation will be is if there is an inverted head and shoulders pattern that says gold is trying to make something that could turn out to be more than just what I'm calling a shorter term to short intermediate term bounce. And that would say that gold has the strength based on the, not the monthly, but the daily and the weekly charts to at least attempt another arch formation. And if it closes above the left side arch of 12.23. This is a continuous contract. That'll be a very good sign because the very next level is up in the 1300s. I don't want to go that far. All I'm saying is right now, gold is acting well. Silver did take off very, very strongly. Now it's just acting okay. It's already in leg C in the leg C in the daily chart. What was impressive is that it did not go down sharply as gold did to retest the lows that were made back in December, week the 5th, at 14.195. Instead it stopped at 15.26. That's a very nice pullback because it gives you a sense of an A to B equals C to D with a rally at this particular point to the upside. And that's going to say that by Wednesday, this coming Wednesday afternoon, if the silver contract closes anywhere close to 18 or preferably higher, then that weekly chart is now helping the monthly chart, and that monthly chart has the 9-period moving average of 17.53, and that's going to be very important if finally it can break and close above the 9-period moving average in the monthly, as the MACD for the first time has really crossed positively in a more constructive way, and the stochastic is higher than it's been since late 2012. Okay, let's just go on to the dollar now, DXY. I'll get to some of these other aspects. So now the dollar is trying its best to have a little bit of a bounce. It should, based on the 120-minute chart. Where did that go? 120-minute chart. Look. Oops, that's the NQ that made a peak D in the 300-minute chart. Where is my 120-minute chart? Hello? Oh, there it is. Anybody home? Right there. Okay, so the 120-minute chart is saying the dollar has had a really strong rebound. It's trying to tackle all the resistance at 97.38 in the index contract. 97.38 is the tough resistance to get through. If it manages to do that, it could even have a bounce to test the 97.50s, and then it might arch over as gold has another rebound. So this is a very important moment, and I'll include the EUR-USD. Why? Because the euro had a fantastic spike, and then it just sort of stalled. And even now it's gone to peak A, peak B, and leg C, not at all higher than it was on that 18th of March big spike to the upside. So that's going to be very important. It's struggling at the 9-period moving average in the weekly chart. That's the EUR-USD, and the 120-minute chart just been peak A, B, C, D, pull back very sharply to the, oops, I forgot what that one is. That is the 50, the 50-period moving average. Right there it stopped. The 200 is 1.08, and it's right now down 0.003. So I don't think TLT, of course I forgot the TLT. TLT made a peak B in the daily. Oh, this is going to get interesting. I'll be back to talk about bonds. Basil Chapman, 1982. I'll be right back after this.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, Tiger Technicians Hour. First of all, I just wanted to do something I've been wanting to do, but I'm going to do it now. I want to thank those who took the trial subscription with that 16-page report that I gave out as part of the webinar follow-through. I really do appreciate it, and for those of you who have decided to actually sign up, it means a lot to me because I put a tremendous amount of work in every single day and every single night. I mean, you can email me any time of the day and night. I'm liable to be at the computer doing my work, preparing for the next day. Doesn't mean to say I'm always right, but it's the methodology that is very important to me. And so I do appreciate, as a vote of confidence, I hope that it's worthy. I'm worthy of that vote of confidence. I'll do my very best. That's number one. Number two is I had recommended in that 16-page report, I had a whole page on this, that for those of you who have never ever gone short, or you have portfolios that are almost mostly long, or you only look at the long side. First of all, there's just nothing wrong with that. Years ago, when I first got into this business, I was a professional musician. I used to do my own work, and I only bought when I had my instincts and my technicals were right. I would just go in and 100% long in one day. I'd buy a broker, Merrill Lynch, or one of the brokers. I'd buy the highest PE, at least one of the highest PE stocks, something like in those days Prime Computer, or just really with a PE that was off the charts, but it had always proved itself to be a winner in an up market and got slammed in a down market. I had maybe 5 stocks, and I would just pile in. When my gut said that it was time, and my technical said it was time to sell, either there was a Granville sell or something to coincide with exactly what I was feeling, or I'd made really nice money, and then I started to trade in and out, in and out. If I did that for 2-3 days and I started losing money, I finally figured out, you know what? There's some kind of a top here. You timed it perfectly. Don't give up that money, because now it's that churning period at the top, and it's very selective. Get out. I would get out and I'd wait for the next buy signal and I'd do it. So I have no problems with people who get out and only go long. What I did want to say, and what I wanted to introduce, and I spent a lot of time, and in my newsletter, this is what we did. I said, where is my newsletter? I wonder if I've got it here from the actual day that we did that. I wanted you to take, a very small position in one of the indexes, the 1-to-1 inverse, and I wanted you to take it as an experiment, just a small position, because this is what I was feeling, that at that particular point, the upside was limited in the Dow. We were only expecting the S&P to make one more nominal new high, and the Dow didn't have to do it. It could, but it didn't have to do it. And I wanted you to get a feeling for being more in control of your portfolio, so you didn't have to get out of anything. If you got really nervous, you learned how to take a small position, none of the quadruples or the duples, just a single. What they work very well. Look at this chart right here. I hope this is the chart. We'll know in a second. No, it's not that chart. Look at this chart right here. There it is. It works really well as a 1-to-1. This is the dog. In this particular instance, you've got the ProShares Trust short the Dow 30, and this is the diamonds. So they work pretty close to 1-to-1. And now you can see there's a potential cup and there's a potential arch right there. The mirror image, no big deal. And don't get carried away. Was just a learner position. And in fact, I was even hoping that you would take a tiny loss. Why? Because your first trade of a new vehicle, a new instrument, if you're making a lot of money from there, it is the worst thing that could. It's happened to me a number of times in different fields. It is just the worst thing. It gives you a sense of invulnerability. You shouldn't have it, but that's the psychology. Oh man, this is an easy thing. Or it's not so hard. What was everybody talking about? Well, I can tell you this. A big success at the very beginning is a tip-off to say you're going to have to work even harder to continue that kind of success. Right. So, but a minor success would be very good. So fortunately right now, that position that they took is up, so that's nice. But that wasn't the point. The point was I wanted my subscribers to finally get a sense that there isn't a them and us, there is a you. And I wanted you to become more conversant with the different techniques, certainly my techniques. I want you to become more conversant with the opportunity. Don't think of it just as insurance. Think of it as the opportunity. And it's a learning experience. I didn't want you to be missing out on the potential of playing the downside the way you play the upside. I'll be right back. Basil Chapman, we'll look at oil and bonds.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, just had a question about whether I would explain my peak C1, peak C2 in a little bit more detail, just a refresher. You know, tomorrow's Technical Friday. There's a lot to do here. I'll try to get to it. Just think of it this way, that all the technicals suggest that we should have run up to make a new high, but the price just misses. To me, if all the criteria are there, except you've missed by a fraction, I'm prepared to call that a peak C1, and peak C2 is the miss that should have been D. Keep it as simple as that, all right? But there are specifics that I go for. You can't just arbitrarily throw it in anywhere. I'm looking at crude oil. Crude oil is up 95 cents at 50.16. One of the reasons why I spent quite a lot of time over the last few days, I was making choices. Let me just do this real quickly. I chose the IBB because of those. I discussed it with Tom when I was interviewed the other day. I discussed it in detail with my subscribers. I knew what we were doing and why I was doing it. And I drew in the left side, right side price time match in the inverted pyramid of the IBB, which went to 375 round number high. It's one block, one share even. Has to go there, and all the rest were under 375, but that 375 showed up both in my scan of the time and price, as well as in the price of the 120-minute chart. That's how I already saw it. And what happened is it did not show in the daily for some reason. I don't know. So there it is. So we get the IBB with a round number high, a round number close on that same bar, and then it plunges down from the 375 level to today's low of 337. 337, that's 40 points. That's a 12-ish, 13% decline in just days. So it says it's almost ready for a bounce, and I've drawn that in. And there's that 200-period moving average support. There's the left side, right side time price match. It went there way quicker, right? So that says to me, okay, be careful, because there could really be a bounce, and then we come back and do some testing. Why a bounce and then test? Because we've only made leg B, possibly peak B, in the BIS, which is the 200% ultra short. So what we did is we've been short via the BIS at 31.19. The low is 29.18. So within 2 points of the exact low, we managed to be able to pick it up the very next day on Monday after that Friday turnaround. And I said, let's take profits in some of the positions today. We're keeping a call, and we'll try to buy it back at a certain level. And look what happened. In a much shorter period of going down 1, 2, 3, 4, 5, 7, 8, 9, 10, 9 or so bars daily, it went right back there in 1, 2, 3. The fourth bar takes out the 36.22 left side high way back on the 10th of March. And I'm expecting there's going to be a lot of resistance there, and we should have a little pullback, test maybe the 35 to 34 area, could even come down a little bit more, and then try to make our way back. And that would give you your legs C and D going to the 37.24 200-period moving average of the BIS. That's the way I'm looking at it. We'll see. So that pattern of the left side, right side price time match. Let me go back to the crude oil. Crude oil right now is at 50.25, and in the 120-minute chart, look what we've got. So I had spent quite a lot of time saying, do I want to do this? Then when I did my analysis of the dollar, it said, no, the dollar's been battered quickly to the downside. There has to be a reflex rally. So I don't want to buy the dollar here. I'd rather wait for the dollar to rally and see crude oil come back. That should also pull back the gold chart. I wonder if I can do that right now. The gold chart. Yep, the gold has probably made a peak F right now, just short term, 120-minute chart. So it says that the commodities which have had a great move should have a pullback as the dollar just regains a little bit of its composure after a spectacular move, and then it continues in its consolidation. And I do consider it just a consolidation. I suspect over a period of time, the dollar is going to go higher, the euro is going to go lower. So that's the reason I want to. The question was, would I look at crude oil? I'm only looking at crude oil. I'm not looking at any W's or anything like that. This is crude oil. And there's that doji candle in the weekly, and that says, be careful, because crude oil, if the dollar needs a rest, it has to have a few weeks. It's had a spectacular run to the upside. That means that crude oil and gold could have time on its side. I don't think such a spectacular move, very nice percentages, but not from where we've come. In other words, you would expect crude coming from the 80, 90 area down to the 40s should have a move back to the 60s. Well, you know what? I don't think so. I think that it's going to have a move to the 58 or maybe 61 area, just above the previous high of 56. No, I'm saying 58 is going to be 56 to 58. Let's see what happens. That's if I'm right in this consolidation phase. So this is a spectacular move in the leg A up, because look how quickly it got there in a quicker time. Oh, wait a minute. It went down from this leg here. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Yeah, the eye can do things. We broke above that, and it hasn't closed above it. So this is a good sign, but it's only the start to some kind of a bounce in crude oil. Hope that helps. That was a question from the Den. Next thing I had was, let's see, charity event? No. Oh, yes. Next question was about bonds. So here, I'm going to show you this chart just for a moment. You remember I drew the arch formation in the weekly chart, and I expected it to get to somewhere in the 164 area. Well, we went higher. We went to 165 and 27 30-seconds. I don't know if the move is done for now, but I do think that the yields are stuck in a trading range. And because it's stuck in a trading range, one of the aspects that has been very important was a question of why did the VIX not move until just late yesterday into today? Why was it just stuck there in disbelief? I think it had a lot to do with the IBB. It had a lot to do with people feeling, wow, I've really missed this last move up. I've got to get in. And they were actually buying. It tells me that based on my TRIN reading and based on the VIX reading and based on the IBB up until even yesterday, early morning, maybe late on Tuesday, I think there was disbelief that there would be a move to the downside. And I'm expecting now we're going to get a nice retracement to the upside, calling it a retracement. Now, the big question is, hey, mister, you were talking about possibly you were expecting that there could be a new all-time high in the S&P. So I can get to it now. I'll do it right now. I'll review it again tomorrow. What was your thinking? So let me go to the weekly charts. Let me move this away. That's the 120-minute chart. Let's get it out the way. I don't want to discuss the monthlies. We'll do that on Friday, anticipating what can happen towards the end of next week when we've changed months going into April. Now look at this. The S&P, that's the S&P. It had a declining trend line like this here, right there, a declining trend line right there. It couldn't really close above it. To be able to get above 2,079, the 9-period moving average, trading now at 2,059, down $1.38, having gone all the way this morning down to 233. What was it? 2,045, I'm sorry. 2,045. I'm thinking of the E-minis. What we're looking at is a chance that the 9-period moving average will start a move that either does one of two things. It either does this, another arch formation failure, or it takes out the resistance level of right there, the resistance of 2,086 in the next 2-3 days, and spirals into the resistance right there of 2104, 2103 to 2105, that resistance area. What that would do is reactivate your peak C1. I haven't put it into the S&P yet because the week isn't finished. So let's just imagine by tomorrow we do not make a new recovery high this week. I would then say it's an active thing, C1, C2. Peak C2 is what I'm looking at as a potential failure pattern, and that over a period of weeks we do not break above 2119.59. Instead, we close below 2,073 under the 9-period moving average, which would be this second time, it depends on what happens this week, second or third time over a period of 4 weeks or 5 weeks. And that would say, watch out, because the MACD is starting to decline. The stochastics at 70%, it's moving lower, and that you don't want to be stuck in a position of waiting. This is how I learned about the phantom peak, and when I'm doing the trading, the E-minis or anything in the futures that trades not in 0.01, but in 25-cent increments, because sometimes what should have been a 25-cent move up is really a 12.5-cent move. It's not going to show, so it doesn't make that new high. And I learned that you need to know how to handle phantom peaks. So let me do this. Let me extrapolate from this information that I'm giving you here the parameters that I'd be looking at. I'm going to say that on the S&P, if tomorrow, Friday at 4 o'clock, the S&P closes above 2,067, 2,071. That's a strong resistance, short-term resistance area. You can even call it 2,072 because that's the 9-period weekly moving average resistance. If it closes above that level, it will suggest that the choppiness, and I know I heard Steve Rhodes talking about the sideways move, the choppiness of this particular phase could in fact result in a leg D to the upside in the S&P. But a lot's going to depend on the VIX index. Now, I don't want to make it so complicated that your eyes close. Oh, man, bonds and dollars. Just make it real simple. The VIX index today made a high of 17.19. 17.19 happens to be exactly the high of the 11th of March. Completely different circumstances. My question always is, how the heck does the VIX know that there was a level of 17.17? I could understand if it was the semiconductors index or the something that fund managers are watching all the time. Most fund managers don't really watch the VIX at all. Oh, they'll come up with it and say, oh, yeah, that's right, let's look at the VIX. What's the VIX? Hey, Joe, what's the VIX doing? But it's nothing that they're really studying. I'm talking about most. There are many that actually focus on technical details more than way back when I used to work with Fidelity. I mean, it was just ridiculous. I produced this technical data and everything from the technical department. I used to be one of the vendors, and I just got so tired of nobody listening until after the fact. And then they said, oh man, you had that nailed. And I said, yeah, if you were listening, but it's just, they were virtually to a person, they were fundamental traders. I'm not saying they didn't do well or anything like that. What I am saying is that they did no technical analysis at all. It was like talking to the wall. It was just very frustrating. Now there are many more that do it. So I'm just saying VIX is maybe a little bit part of the curriculum vitae that they have of the technical tools, but only when it really works, only when it's really active. So now what's happened is we retested that exactly. If the VIX index by Monday starts to trade in the 1750s, now here's the answer to Kevin's statement. I always say that for a sustained, that's the word that's missing, Kevin, that for a sustained move to the upside or the downside, you need to see the VIX index on the downside making higher highs and higher lows, and then starting for a long time, I'll be making the 18 to 19 area the warning, but holding in the 20s is your license to say, now we've got a sustained move. And that's where bad news will keep coming in. And the whole thing about it is there was news, and it filtered in the market as something that was going on. Nobody really knew. And today we found out that it's the oil spike. Well, you're going to find out that it's just one of many factors, and that the real thing will be if we start to make lower lows in the price of the S&P. Let's use the S&P as an example, and the Dow, and the IWM, and the comp index, and the NYA, at the same time as you're making higher highs and higher lows in the VIX index. VIX goes into the 20s. Believe me, you will start to hear the bad news. So the answer to the statement, or the response to the statement is, on a shorter term basis, other things can be a factor, but for a sustained move, you have to have higher highs and higher lows, and the VIX to be holding in the 20s, and bad news will emanate. I think I did the music for our last commercial before this final break, final segment. I'll be back. Basil Chapman. Now the Dow's only down 20, and the S&P's down 2.29, and that's why we took profits in our position in the BIS this morning on part of the position.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
What a day for the Futures Hour, huh? That should be exciting. Looking forward to that. Now, two things. Look at this bond weekly chart. This is the 30-year yield, the white one. This is the 10-year T-note yield, the goldy brown one. And the cyan light blue is the 5-year. Look how close they are getting right there. What we're looking at in bonds, I think it's the first time we've not seen this cluster formation. I've been talking about it for a while, but we haven't seen the cluster formation. I'm suspecting in the next over into the summer is going to be the first real test that we get to see if there's any kind of potential for a crossover, that is where there's an inflection point where yields get very close together and then one's inverted. One starts to move above the other, the shorter term above the slower one. I'm not even sure how it's going to be working because we're in a different era completely than we've ever been in. Yet the yields right now, the 30-year has been here before. It was back here in 2012. And the 10-year and 5-year have been there many times before over the previous years. It's what's happening with it. So let me just do this real quickly before we sign off. I'm anticipating that we're going to get a bit of a bounce. I'm anticipating that bounce is going to get a test based on the VIX index. And probably if the bounce goes into tomorrow, and then there's a little nervousness over the weekend, what happens? Let's see where the VIX is Friday at 4 o'clock. If the VIX is back under 15.38, it says the bounce could have some legs to it, but some sectors are really now the determination, as far as I'm concerned, is that there's been an inflection point of consequence in the IBB and some of the sectors. I'm watching the semiconductors real closely, and there are some sectors. There are other sectors that are going to be very important over the next 3-4 weeks. Do they hold? Do they foretell a pretty decent summer? What's going on there? So this is a very important moment in the market. That's why I believe that having that position, the small, for those of you who have never done it, some kind of, well, now it's already moving along, but just learn how to use some kind of insurance policy, like just a 1-to-1 inverted of one of the major indexes. Just a small position. You can even say it's a 3-month experiment, and I'm prepared to lose $150. Just make it real clean, real simple, real nothing to it, and see what happens. Just get a feel. You want to be in control. When the really big turn down comes in 6 to 18 months, I'm talking about the really big one, you want to be prepared for it. And I think you need to practice. It's like anything else. You practice and you get better at it. This is as simple as I can make it. So with that in mind, let me do another thing here. Tomorrow is going to be Technical Friday. Email me some questions, and I'll spend a little bit more time being Technical Friday. We can look at it in terms of the Chapman wave questions. I can go through the peak C1, C2 again in a little bit more detail. In fact, we'll have more information. We might have the S&P running very strongly tomorrow afternoon, and it'll make it a real worthwhile lesson in seeing what does it mean, a peak C1, C2. It's like a heads up. It's like saying, be ready, because you don't now have to make D. You can, but you don't have to in the Chapman wave. So this is going to be a very important bounce that's coming up. Well, the bounce is there. Dow's up 5. S&P's up 31 cents. That's what we were talking about. That's what we're expecting. That's why we took some profits in our short position. And we're quite prepared to get back in at some point because we think that sector's going down. Folks, have a wonderful rest of the day. And I'll be back tomorrow for Technical Friday, my usual time. Stay tuned for Larry Pesavento. Of course, it'll be a great show with Larry as always. And program all the way through. Thanks for being here. Check out my service, Opening Call on TFNN. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.